Traders, welcome to the video. In this video, I want to show you a very quick strategy that you can use to scalp the boom and crash market. The video I released yesterday is a very simple way that you can use to catch this spike in the boom and crash market. Don't worry, I will drop the link of the video in the description box of this video. If you look carefully on my chart, this is the 1 minute time frame and this is boom 1000. And if you look on my indicators over here, I have Bollinger Bands and RSI. I have MACD, RSI and moving average inside this point. On the RSI, the level 85 acts as a good resistance level. When market buy to this point, we expect it to sell to the downside, and the level 15 acts as a good support level. When market sell to this point, we expect it to buy to the upside. This is also the logic that we are using over here, but we are using these indicators to get the right support and resistance level that can push price and give us 5 to 10 candles. So here we are trading the retracement, this retracement that is over here. So let me first give you the settings to this indicator before I explain how this strategy works. So first thing you do is to click on this indicator icon over here. As you can see, I have just 4 indicators: relative strength index, Bollinger Bands, MACD and moving average. To select the first relative strength index, click on the F icon on the main chart. Scroll down a bit, relative strength index, click on that. Make your period to be 1, apply to close, style 1 pixel, select color of your background. If your background is black, select black. If it is white, you select white. The levels, click on this pen icon, add level, type 15 and 85, style, make it 1 pixel and select color of your choice. After that, click on save. For the Bollinger Bands, click on the F icon on indicators Windows 1, Bollinger Bands. Make your period to be 14, deviation to be 200, shift to be 0, apply to close, style 3 pixel and select color of your choice. After that, click on save. For the second RSI, click on the F icon on the main chart. Scroll down a bit, RSI, period, make it 1, apply to close, style 1 pixel, select color of your background. For these levels, click on this pen icon, add level, type 15 and 85, style, make it 1 pixel and select color of your choice. After that, click on save. For the MACD, click on F icon on indicators Windows 1. Scroll down a bit, MACD, click on that. Make your fast EMA to be 12, slow EMA to be 26, MACD SMA to be 9, apply to close. Styles, make the main to be 1 pixel, select color of your background, signal to be 3 pixel, select color of your choice. After that, click on save. For the second moving average, click on the F icon on indicators Windows 2. Moving average, click on that. Make your period to be 1, shift to be 0, method to be simple, apply to previous indicators data. This is very important. Style 3 pixel and select color of your choice. After that, click on save. So if you follow my settings correctly, your chart should look exactly as what you see over here. So for the zoom level, let's say this is the innermost zoom, so you will zoom in 3 times. 1, 2, 3. So this is the best zoom level for this strategy. I want you to pay close attention now and listen to all the criteria that you want it to meet before you enter a trade. So first thing you want to see spikes to the upside, as you can see over here. Then you want to see the spike pushes these Bollinger Bands into the 15 and 85 level, which is indicating to you that the buyers or sellers are changing hands. But then you want to see this moving average enters into the 85 level. At this point, you want to see the cross of the blue and the red moving average. This is where you have the cross. Then immediately this candle closes, you enter your sell and count your 5 candles. You see how market delivers that. This is a very simple strategy. You can see how fast it is. You just need to be there to take your trades. So let me show you more examples. Over here is another one. You can see these 3 spikes to the upside that pushes the Bollinger Bands into the 15 and the 85 level. At the same time, you want to see it pushes the MACD and the moving average into the 85 level. You want to see the complete cross of this red and the blue moving average. Enter a sell and count your 5 candles. You can also count 10 candles if you want, but the 5 candles will give you higher win rate. You can see this long spike to the upside that pushes the Bollinger Bands into the 85 level, at the same time into the 15 level. 2 criteria have been met. Then you wait for the MACD and the moving average to cross each other. You want to see it cross it down and they are facing downward. Once you have that, you enter your sell and count your 5 to 10 candles. See how market delivers that. So this is crash 1000 market. This strategy works perfectly on the boom and crash 1000. At the same time, boom and crash 900. If you stick to this market, you will get a lot of opportunity in a single day. So you can see at this point, we have two spikes to the downside. So this is a long spike that pushes the Bollinger Bands into the 15 level and the 85 level. This is the crash market we want to buy. So we want this MACD and the moving average to enter into a good support level where we can buy from. 15 level is what we pay attention to when trading the crash market. You look for when there is complete cross of the two lines, enter your buy, count your 5 to 10 candles. So over here, you will not take any trade. Why? This spike pushes the Bollinger Bands into the 85 level, with the lower band into the 15 level. But if you look carefully, you will see that the MACD and the moving average did not enter into the 15 level. So you will have no trade here. You see the market retrace a bit and then spike. And over here, after the spike, the Bollinger Bands did not enter into these levels. It only goes below them. But the moving average enters into the 15 level. Here, you will not take this trade. Why? Because you want to see this enter into the 85 level and the 15 level. At the same time, this one enters into the 15 level. So market can do like this and then spike to the downside before you even have your 5 candle. So you want to make sure that all the criteria are met before you enter a trade. So this is the boom market. As you can see, this is the current market. It is playing out right now. We have a 2 spike to the upside, pushes this Bollinger Bands into the 85 and the 15 level, MACD into the 85 level. This is the bull market we want to sell. So once you have the cross is visible at this point, you enter your sell and count your 5 candles. You see our market delivers that. This is also another one at this point. Spike, retrace, spike, pushes the Bollinger Bands into the 15 and 85 level, meaning that the buyers and sellers are exchanging ends. Here you have the MACD and the moving average enters into the 85 level around this point. Wait for visible cross. Once you have the cross, enter a sell and count your 5 candles. Crash 900 market. So it is the same thing you are looking for again and again. Spike, Bollinger Bands enter into these levels, cross of the MACD and the moving average. Enter your buy, count your 5 candles. You see that the 5th candle is already generating. And over here, the same thing again. Spike, retrace, spike, spike. Enters into these levels. Cross of the MACD. Enter a buy, count your 5 candles. So you can see how accurate this strategy is. All you need to do now is to go back on your chart, back test this strategy, go as far as you can, test it for at least 2 to 3 weeks. Go on your demo account and trade it in a live moving market. So after demo trading and you compare your win rate, you see how nice it is and you like it, then you can decide whatever you want to do with this strategy. If you find this video helpful, don't forget to like this video, subscribe to this YouTube channel, turn on notification bell so that you get notified anytime I release a new video. You can also check out my other videos that are displaying right now on your screen. Thanks for watching.